Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. On Thursday, investors fled from risk, and the dollar reached its peak. The S&P 500 dropped by 4.84%, the dollar index by 1.64%, oil by 6.9%, gold by 1%, and Bitcoin by 3.85%. It's worth noting that these instruments have reached their technical targets and now appear visually ready for a correction. So, could the panic be over? Even the peak of the Brexit panic in June 2016 lasted just 2 days, excluding weekends. The pound lost 16 figures in 2 sessions, rebounded by 3 figures over the next 2 days, followed by a prolonged, wide-ranging consolidation until the end of August. The target range of 1.1110-1150 on the daily chart has been met. A correction toward 1.0955 is possible. And if the market still has an appetite for further growth, we need a break above 1.1150. The next target could be 1.1276. We need technical confirmation that the market is cooling off, and today's data NFP could significantly influence this. It is also worth noting that over the past 3 days, the yield on 5-year US Treasury bonds has declined from 3.91 to 3.7, a level last seen in September 2024, a factor supporting the dollar. The price has begun consolidating within the range of 1.1027-1.1110 on the 4-hour chart, while the Marlin oscillator is exiting overbought territory. We await the data release and the euro's reaction. And now it's time for GBPUSD. Let's discuss it with Paulo Greco. As of April 4, the average volatility of the GBPUSD pair of the last 5 trading days stands at 111 pips, which is considered as high for this currency pair. On February, we expect movement within the range of 1.30 to 1.3222. The long-term regression channel is pointing upward, indicating short-term strength, but the downtrend on the daily chart remains intact. The CCI technical indicator recently entered overbought territory, which signaled a downward pullback. The GBPUSD pair continues its strong upward movement, driven by just one factor: Donald Trump's trade policy. We still do not consider long positions viable, as we view the current rise as a correction on the daily timeframe that has taken an illogical form. However, if you trade solely on technicals, long positions remain valid with targets at 1.3222 and 1.3306. The pound may continue rising if Trump continues to introduce new tariffs. Short positions remain attractive with targets at 1.2207 and 2146. Sooner or later, the upward correction on the daily chart will end, assuming the previous downtrend hasn't already ended by that time. Even if we are not witnessing the beginning of a new uptrend, a downward correction is necessary, as the pound has been rising almost without any pullbacks. That's all for today. Wish you best of luck.